Welcome to TradeLog AI Academy. Today, funding rate essentials, what it tells you, and when it becomes dangerous. Funding is a periodic payment between longs and shorts. It exists only on perpetual futures. Its job is to keep the perp price close to the index/spot. Here's the rule. If funding is positive, longs pay shorts. If funding is negative, shorts pay longs. Funding shows which side is paying a premium to stay positioned. Perps don't expire, so the market needs a balancing mechanism. When the perp trades above the index, funding tends to rise to cool longs. When the perp trades below the index, funding tends to fall to cool shorts. Think of funding as a holding cost. Funding payment equals notional position size times funding rate. Notional matters more than margin used. And because funding repeats every interval, the cost stacks up over time. Funding also signals positioning. High positive funding usually means a crowded long. High negative funding usually means a crowded short. Crowding increases squeeze risk and liquidation cascades. Funding becomes dangerous when three things stack: extreme funding, high leverage, and large notional. It's even worse if price goes sideways and you hold through multiple intervals. Cost accumulates while you wait. With a thin margin buffer, a small move plus funding can trigger liquidation. Not all high funding is the same. A spike is a short-lived jump, often news or a temporary imbalance. Persistent funding stays elevated across many intervals, true crowding. Persistent extremes are the ones that often show up before squeezes or reversals. Before you enter, run this checklist. Is funding normal, elevated, or extreme? Is it spiking or persistent? Can my position survive N funding intervals? And is my stop at invalidation, not at comfort? Cheat sheet. Safe is near zero. Stable funding, low crowding. Caution is elevated and persistent, crowding rising. Danger is extreme and persistent, or a spike plus rising open interest, squeeze risk. Final point. Funding isn't noise. It's positioning plus holding cost. Track it in TradeLog AI so you spot crowding early and avoid paying to sit in the trap.